By the end of this video, you will know the top 3 questions you should always ask yourself before investing in any company and why they're so important and impediment to your success as an investor. How's it going, world? Michael EJ here, coming to you with different videos trying to help you reach your financial goals and dreams by becoming the best investor that you can be. Now, if you're new to the channel, how's it going? Talking different stock tips and tricks for investing, mainly in the stock market, other areas too, but it's all about thinking different on this channel. How can you be different from the market so you can outperform the market? So if you'd like to learn more about that, make sure to subscribe, like this video, and let's get started. Now, there's mainly 3 questions you should always ask about before investing in any company. Any company, it doesn't matter how great the valuation looks, that doesn't matter how the market's really misunderstanding the company. None of that matters till you answer these 3 questions. First off, what's driving the past returns of the stock? So if the stock's been run up, why is it being run up? What happened in the past? If it's been beaten down, why is it being beaten down? Now, ideally, it will come from fundamentals or things that are fundamental related. So that will come from they missed earnings announcements, or they did well with earnings, but they gave bad guidance. Things are looking a little shaky. And those are usually the stock charts where you're looking back in the past and you see large rises or large falls in 1 or 2 day spans. There's also other ways that are fundamentally related, including increasing dividends or share buybacks. Those things you want to happen. Those are the good return drivers. You see that the fundamentals are what investors are really paying attention to. Things to be cautious of. It's okay if this is happening, but things to be cautious of includes being in a preferable industry, or there's other things that's going on in terms of just news and announcements, like litigation's going on with a company just filed for bankruptcy, pharmaceuticals, FDA approval. I talk about a little bit of other reasons why a company might rise or fall in my video about how the stock market works. So make sure to check that out. I'll leave that maybe in the description or put it in the card just so you can look deeper into it. But it's very important for you to know that, because if you don't know what's driving the returns, how do you know if your thesis is going to play out? Because in a lot of situations, the stock just isn't being driven by the fundamentals. And you have to realize sometimes that's okay, but you just have to be okay with that. And if you're a longer term investor, you really have to be okay with that. Like, that almost doesn't matter. But you still need to know. Number 2, competition. How much competition does this company have, both directly and indirectly? A lot of people just overlook Porter's 5 forces, overlook the concept behind it. Trying to understand how do you have a competitive advantage in your industry, both for current existing competitors as well as up and coming competitors. And that's very important, because long term, you're not going to reach those growth reach your growth potential, reach those growth milestones if you got a lot of competition, if you're not fighting it off, if you're not putting things in place to fight off the competition. I mean, to me, that's one of the things that hurt a lot of companies. They so much thinking about growing more and more and more that they forget that, hey, I need to do whatever I can to fight off the competition. That is something you need to consider. What is the competitive landscape of this industry, and where does this certain company that I'm interested in investing in fit? How are they fighting off everybody? What is their niche? Is there a lot of competitors? Is there a lot of indirect competitors? What's going on? Lastly, what's the return profile I'm expecting once I invest? So remember, the returns come from 3 different areas. They come from shareholder yield, earnings growth, and multiple expansion. So a lot of this depends on what kind of investor you are. If you're more of a dividend or shareholder yield investor, of course, shareholder yield is what you care about. If you're more of a growth guy, you really care a lot about the fundamentals. You want a lot of it coming from profit growth, earnings growth. But a lot of people just forget about the multiple expansion part, especially if you're a value person. That's one thing that gets me about you value guys. A lot of your returns are coming from multiple expansion. people realizing, oh, this company isn't as bad as we thought, and they start buying in, and the fundamentals might not always be there, but the multiple takes off. So a lot of that depends on what kind of investor you are, but also depends on how long are you investing as well. Time horizon is very important. I mentioned that in the video already. I put that in the card too. If you're going for a shorter term time horizon, shareholder yield and multiple expansion is what's very important to you. For the most part. If you're longer term, then the fundamentals really matter. Like, you need to make sure this company is going to grow for years and years and years to come. So that's all I have for you all today. Guys, always keep these 3 questions in mind whenever you're looking to invest in a company. Michael EJ here, helping you reach your financial goals and dreams by becoming the best investor that you can be. I'll see you on the next video. Peace.